us. And so we're going to Ethel. Ethel, one sector that has weathered the COVID-19 storm remarkably well is technology. This is hardly surprising given the wholesale move to remote working that relied so heavily on digital solutions. This has also prompted many businesses to invest in new IT systems and digital transformation as they plan growth for 2021. 2020 having been very disastrous to a lot of entities. Now, does this anchor us in the age of the fourth industrial revolution? We've heard a lot about the fourth industrial revolution. What is it? And has this anchored us in it? How crucial is it for businesses to get up to speed to get with tech transformation?
Thank you for the question. I'm always wary because... Hello? Hello? Okay. Might have to. Hello? This is better. Okay. So I'm always wary because with tech, there tends to be so many buzzwords. Fourth industrial revolution, future of work. Here's the basic facts. The world changed. And because the world changed, we needed to figure out how to still work and make money and grow our businesses. And the simplest or the straightest line to get there was the use of technology, because that enabled us to redesign business models, relook at engaging people in a different way. Technology has, the example being, and I think Letitia alluded to it before, is there are some clients that we have that we've been having conversations for years about designing products that are enabled for mobile, that are enabled for commerce, that are enabled for web. And they just said, no, our clients are not, they don't do that. So we don't need that. And then 2020 hits, and all of a sudden, we're all home. And it's, we need a technology strategy. We need to figure out how we're going to make money even though people are home, right? So it's a change of a set of circumstances, but it has enabled us, especially in the technology consulting space, to now go in and say, hold on, the thing is not just to slap technology on top of your product, which is what a mistake a lot of the companies are making now. It's like, we need a web front end, or we need an e-commerce platform, versus can we take a step back and look at our products and offerings and see how we can redesign for digital, right? That's the next mistake people are making, right? It's not designing for digital. So example would be if you're selling insurance, forgive me insurance folks, but if you're selling insurance and you're selling motor insurance, and what you do in a pandemic is create a web front end that, so that somebody will buy insurance from you, you're not going to get the numbers because the trotro driver is not going to go online to buy insurance. But if you made it USSD based, SMS based, or you made it even WhatsApp based, then you are attracting the clients, right? You're looking at here, how do we make digital accessible? How do we design, or are we building micro vehicle insurance, right? So that people can pay with mobile money in little bits and purposes. So, it's a whole circle of not just that we're all running wholesale toward digital, but that's not just the issue. It is making sure that the digital that we're running to is enabled in the way that the people that buy products and service from us can do it. Or it could just be that redesigning your whole product base so that you attract a new set of clients.
So you're talking about proper adaptation systems, and people need to actually talk to perhaps professionals than just sitting back and saying, we need to go technical, we need to go tech, basically. It's like you're looking at your beautiful foot that you've just pedicured and saying, I'm polishing my gun and just shooting it. I have this wonderful business plan. something that is going to help me take over the market, and I have to share it.
And your core. A little bit of tough love for our bankers. I doubt, and I know it's a little difficult to hear, but I doubt that innovation within the banking sector is going to come from the banking sector and people who work in the banks right now. It's not going to happen. Now, that's a little hard to hear, but there are an amazing number of young people, the Dream of a CEO is sitting here, who are building amazing payment platforms, who are rethinking payment processing, rethinking front ends, rethinking ways of ensuring that you can keep your core, right? He's taken him 10 years to get to this point, but he's built a platform that works. It might be that the numbers don't look interesting for a bank, right? So maybe he's doing, $1 million a year in terms of inflows that are coming. It might not look interesting to you, but look at it in terms of the fact that he's onboarding Makola women, right? Your people are not necessarily going to Makola. Makola women are using his app to do payments. So you need to have a conversation, right? So just as a point, I haven't had a room of bankers like
So
this in a
many
while.
bankers.
As I wanted to say.
All right, let's go to the next.
Let's
Let's get to the next person. Okay, Letitia, this is just for you. 5 seconds.
Now. Sorry, yeah, just 5 seconds. And I think that the point that Ethel is making is it's about collaborating with the startups, right? We all know that the banks have the capital to pick an idea and to implement it. But we're talking about collaboration with the startups because they have the agility and they have the finger on the pulse, so to speak. So it's more collaboration rather than looking at what they're doing and trying to replicate it. I just had to chip that in.
Okay, wonderful. Daniel Nadu, they just took a swipe at you. Please answer.
Yeah, thanks, Moses. And I'm not sure I will agree with Ethel, but there's one point I agree with, though. For us as banks, we need to look at our business models and ask ourselves, are we the ones to innovate payment systems, or we work with the fintechs? So do we see the fintechs as competitors or collaborators? And that's the important distinction, because a bank typically, or any organization, typically doesn't want to own everything that it uses for production. You always outsource certain services, So it's the way you look at it. If the fintech is my collaborator, then I'm happy to collaborate to take the service. And going to what you said, I'm happy to help that fintech to grow, because ultimately, it grows my business too. So we're not in competition, I don't think so, because there's things that I do that a fintech cannot do anyway, And I think that's the beauty of the system as it evolves. We learn to collaborate. From my point of view, I need to be able to manage complex systems, which is what I said. Manage relationships. Managing relationships across a whole lot of industries. It won't be just the fintechs. I manage relationships with perhaps technology consultants or technology firms. I manage relationships with the logistics firms that provides me bullion vans. So your operating environment relies on the extent to which you're able to manage all these relationships. And we like the fintechs. They're a great addition to our business.
You're not risk averse. And now let's go to Ethel, and then we'll go to Mr. Jamal. Now, are you not risk averse in the financial sector or the banking sector of the sector of the economy, as it were, as a result of a lack of data. Yeah, and Ethel, what can be done about it?
Okay, actually, it's a really good segue, because, to be honest, part of what I was going to add to his conversation was, I think it would be worth it for the banks to almost begin to provide platforms for their people, for SMEs that work with them, to be able to do simple record keeping, right? So if, for instance, because I think I had this conversation before with another bank, which had a women banking sector, and I said, if you invested in something as simple as a customer relationship management platform, or I don't know, financial accounting platform that your SMEs that work with you get to use, right? You do some training, you allow them to be able to put in how much their expenses, how much they're spending, and that sort of thing. Then by default, you're collecting data, and you put a little thing in the contract that says that you can mine that data, right? But if you provided platforms for your people to be able to be providing you data as a way to be able to tell them, look, if the more data you provide, the easier it is for you to get a loan with us. Yes, someone is Paris Beswa, I always get her surname right, but she's in Kenya, and she did something really interesting where she realized that the farmers were not getting. It was hard for farmers to get loans, so she built this system that I think collected data via USSD. How many seeds did you plant? What was your yield? You know, that continuous data for smallholder farmers. And then she went to the banks and said, listen, I have all this data on the farmers, how many seeds they're buying, what is their yield for the year, and that sort of thing. If you partner with me, you can then provide loans to farmers. So we've almost created a credit, scoring system, based on this data we've collected. Now, if you partner with us, then you can use our data to figure out who can pay and who has money and whatever. Now, long story short, she's had to raise money to become a small bank herself because the bankers wouldn't work with her, right? And I think that if we did that, and I'd be looking at that concept, if we did that with SMEs here, and the banks were proactive with that, it might be a way to collect data and at least de-risk some of the things that we're doing.
Okay, let's come to you.
2 quick points. It's the capacity building that she talked about, where we get people together and try and explain to them what our expectations are. And it's baby steps, but at UMB we have an incubator, and that's what the incubator is set up for, where we meet periodically with groups of entrepreneurs and just try and speak to them about how we want things to be organized without really impacting on how they run the business, so that we can understand. The second part is also collaboration with partnerships. You mentioned Kudigo earlier. I'm familiar with Kudigo. Kudigo is actually trying to do a stock management system for the Makola woman out there. Now, if that works and we collaborate, all that information, which the market woman cannot write down for you, is on that system. So you can use that data into some of your lending decision making to be able to do it. So I think we're all heading in the right direction with some of these things that are happening, but I do agree we have to move at a faster pace.
Okay, thank you very much. I know you have something to say, but let's go to, you don't have anything to say. Let's go to Ethel, and then we'll go to Mr. Jimo, and then we'll go to our gentleman from Deloitte. His name just escaped me, I'm sorry. So, Ethel.
We do have an angel network in Ghana. Letitia, I think Letitia will best speak to that. I know that, and I'm not proposing to speak for Letitia, but I think one of the big things with convincing middle income and high net worth individuals is that it's patient capital. And a lot of people don't understand what it means to invest. And I say to people when they come to us, and when there's this year there's been a couple of exits, right? So Paystack, which is a payment platform out of Nigeria, was payment platform is reducing it, but just so people understand, was bought by Stripe, which is a global payment platform for $200 million. So two very young small boys have now, accelerated their lives, and all of a sudden people were having conversations about, oh, but we want to invest in this. And also, well, when you're going to do angel investing, understand that it's money. You have to think of it as money that you're not going to need for the next 10 years. So if your plan shouldn't be, oh, I'm going to put money in this fintech, and then you'll be stressing the CEO out for the next 5 years to bring you returns. No, it's patient capital. It's money you don't need for the next 10 years. I would like to see more women-led, because that's important to me. High net worth, middle-income women, whether it's when I say, look, you and your friends, everybody chip in whatever it is, to $2,000 to $10,000 over time, and make investments, and maybe join, because there are issues with having to do your own due diligence. Then talk to Letitia that has the network of skill sets that you need to do due diligence. Make sure that you're not paying for somebody to go on holiday. And then we're slowly, whether it's piecemeal by piecemeal, you're doing angel investing. So a lot of people in the room here, if you're earning if you're middle income, earning an appreciable amount of money, you should be able to start angel investing. Yes, you can have a conversation. Someone will tell you, let me speak chief for those. Miko tu nyama wa China, I will get more money than this thing that you're telling me. But then it's a risk you're taking. You're doing a number of investments. One might give you 100x in the next 10 years. But that is the very nature of angel investing. So that's part of the conversation. Maybe Letitia, I'm sorry. This was, a little bit more, just the financing space. And then when you grow enough and you get to a place, the banks will chase you for a fact. When you are in that place, that the banks will come. They'll find you. They'll come and knock. They'll tell you, oh, don't you need a loan? So you start with the angels, and then when you need the banks, they'll
So
show up.
I